Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on the 9th of February. I'm Nadine Blaney. It's really nice to be here with you, and what a difference a day makes, huh? We saw the local market sold down to the tune of about 2% on Friday. Well, guess what we're looking at today? A gain of roughly 2% as well. So that is the CIBO Australia Index that's on your screen right now. The S&P ASX 200 is up by just about that much as well. When I think about drivers, it was that, really that sentiment that was established on Wall Street on Friday, even though we've got a really big week in terms of data there, jobs data, inflation numbers as well. But yeah, all things looking good. We've seen Japan's market continue to power along today. We have also been watching E-minis in the US, so US futures looking pretty positive, mildly positive. But all things considered, this has been a really strong session. So we'll get into the hows and whys with my guest, David Scutt from StoneX in just a tick. But I think it's worthwhile mentioning that this bounce has happened across asset classes, including Bitcoin, one of our key themes today as well. We did have some data locally, household spending. I don't think it's any big surprise that we've got households tightening their belts here. So we'll take the green on the screen. All of the 11 major sectors are pushing higher today. That includes technology. So if we look at some of these heavily sold off names, WiseTech Global, for example, up by 3% today. Xero up by 0.8%. So actually underperforming the broader market. Both of those companies were featured on today's episode of The Call. So we asked my guests, Sanjay Narendran from Team Invest and Mathan Somasundaram from Deep Data Analytics, if they are lining up to buy any of these really heavily sold off tech companies. You'll have to listen to the episode to find out what they say. Now, in terms of the major miners, again, a really strong session coming through here. BHP up by 2.3%. We've got Rio as well, up by 2%. Fortescue, you can see there on the screen, even MinRes, up by 44 cents to 52.21. Telcos as well. I guess here's where you get a little bit more color. We will be hearing from Telstra in this reporting season, up by 0.2%. Now let's get across some of the stories today. Speaking of earnings season, Car Group maintaining its full year outlook of between 12 and 14% pro forma revenue growth. The Dex's Convenience Retail REIT has more than doubled its half-year profit. Argo Investments saw a rise in half-year profit despite relatively flat investment revenue. And we just spoke with the CEO, Jason Beddow, so you can listen to that one online if you'd like. Web Travel, while it fronted investors today, said that its FY26 guidance remains unchanged, so recouping most of the losses it suffered last week when we learned about that audit in Spain. And Pepper Money confirming it's received a takeover offer from Challenger and majority shareholder Pepper Group for nearly $1.2 billion. Yeah, that's a pretty big 27% lift in its share price as well. Let's get the analysis though, shall we? David Scutt from StoneX. Scutty, nice to see you there. So Friday, we were all a bit concerned about what was happening out there, and it appears as if all is forgiven. Is this a dead cat bounce, you think?
G'day, Nadine. Great to be back. Yes, polar opposites to what we were talking about when I was on the show back on Friday morning. Look, it came into a weekend after some pretty heavy selling in the days beforehand. Now, the Japanese election result, which we'll go through in a little bit, is helping at the margin to go and boost risk appetite. But I kind of question whether it's going to go and have longevity, because the concerns that we were talking about in some of those assets in particular, particularly AI names, the infrastructure spending that place, and then some of those other names like Bitcoin, hasn't really been resolved at this point. So let's enjoy the rally while it lasts. Whether it actually lasts beyond the short term is a little bit debatable.
But it does show, Scotty, that folks aren't scared to get in and buy the dip.
Absolutely. There's always a price, and you never see a move in one direction or another as well. And so we saw that again firsthand over the weekend, a big short covering bounce. And then, of course, we've seen some follow through today. There's still value out there. People will still see value. But when you have this very, very choppy price action like we're seeing at the moment, and very big intraday ranges is another feature, that's typical of what you see at one of those turning points in the marketplace. So again, it looks pretty decent, the performance in the short term, but I still have some pretty big reservations about whether it will last beyond that time frame.
All right, so let's talk about Takeishi's election victory. So, I said that the Nikkei came out of the gates really hot this morning. What do you make of the price action?
Depends on which market. The price action in equities was pretty remarkable, I've got to say. For one of the biggest equity indices in the world, the Nikkei futures, when they opened up, was over 7% higher. And that was with all the polls going into this election all favouring LDP victory. The question was really, what kind of scale would it be? And that was answered definitively. As things stand right now, it looks like the LDP will have a supermajority, which is really powerful who people aren't across this. It basically allows the LDP to go and veto the upper house when it comes to some policy decisions there, and also going forth through reforms. So when you look at that mandate, it's probably not surprising you're going to see the move in equities. But when you look at some of the other markets, it looks like quite a bit of this has already been priced in. There's been very little movement in JGBs, especially at the back of the curve where there was a lot of concern there about the debt trajectory for Japan. And dollar yen's actually trading lower on the session rather than higher, but there's a few mechanical reasons behind that, including verbal intervention. So
what does this mean, though, likely in terms of the BOJ? Because we've been expecting these rate hikes to come through. Will this be sort of a reflationary environment, more spending, more government spending, adding to that picture?
Well, that's the environment that the fiscal policy of the equation is looking to go and foster. But of course, on the other side, we know that monetary policy will be looking at that counterintuitively. They'll be saying, well, actually, we need to go and potentially start to go and speed up the pace of rate hikes coming through to go and keep a lid on that inflationary pulse. Now, what you're looking at here is a swaps curve, and it's basically the implied pricing of what's been seen for each BOJ meeting over the course of this year. You can see by the middle of this year in June, there's already a full hike priced in and a second one by October. Now, we know that when it comes to the BOJ and the Ministry of Finance in Japan, they're not what you'd really deem to be truly independent entities. They tend to work in very close unison. So it's going to be very interesting to see how this goes and plays out. I wonder whether Takeichi may go and have that mandate and basically say to the Bank of Japan, cool your heels a little bit. Let's go and see what we can do when it comes to fostering this inflationary environment beyond the short term. Now, if that does play out, it's very good news for riskier asset classes out there, good for risk appetite in general, because it means we're likely to see a lot more cheap yen flooding the markets beyond what we've already seen.
So that could be a counter, I suppose, to some of the negativity that we've seen in terms of sentiment and liquidity concerns as well that we chatted about on Friday, right?
Yeah, absolutely. That was my biggest concern, and it still remains a concern of mine, is that you'd go and see an unruly unwind of those yen carry trades. And that would have been sparked in part by strengthening in the yen. Well, we haven't really seen any meaningful move like that today. We're seeing that when it comes to interest rate increases, yes, they incrementally go and create downward pressure on those carry trades and could go and see become disorderly. But the biggest concern would be if you saw asset prices start to go and really unwind rapidly. That would be the biggest one for me. And that's the missing piece of the puzzle right now. So as long as we have this very, very reflationary policy, not too aggressive from the Bank of Japan, to me, when you look at the equation, it does go and filter through to a more positive risk appetite and environment than what we had 24 hours ago.
Okay, right. Well, look to Japan, but I think we will be looking as well to this week at the data dump that's coming out in the United States. I mean, these are really important numbers for a data-dependent Fed, yeah?
Absolutely, and thanks to or because of the government shutdowns and reopenings that we've seen at various stages, this is a really unique week. Of course, we've got headlined by payrolls on Wednesday, day before that retail sales, and then inflation data at the consumer level on Friday. All in each right would be mammoth events in any given week, but they're all arriving within the space of days, and also some bond options as well. This is just something that's really interesting. This is kind of related to the GDP growth and the inflation trajectory. Anyone who's not come across this measure, this is trueflation. And what this does basically, it will go and suck a whole bunch of information on prices in real time and a much wider basket than what we get when it comes to the BLS measure. And it's showing that over the course of the year, a 0.68% increase only. Now, you can see it's just been shearing off a cliff. Now, this is starting to get a lot more attention out there, because what does it mean when it comes to the economy? Well, if this is really reflective of what we're seeing in the real price environment, it suggests that something is not quite right in the US economy. Now, this is just an independent measure. We know that it can't be taken for a gospel that it's going to be telling us the right trajectory. But it'll be very interesting to see what happens on Friday with that CPI data in the States. If we get a big undershoot, that might start to go and raise a few question marks about underlying demand in the US economy and that strength that we've been seeing coming through of late.
Oh, that's really interesting. Okay. What do you reckon, though? I mean, do you think that is a true picture?
If you look at Truflation's track record over the course of time, it does tend to go and lead, but the violence of the move that we're seeing over the past couple of weeks or so is very strange. If you watch the updates, and they come through and on various social media sites, they'll go and say like what the update is year on year. And it just has been this sequential movement lower over the course of the past few weeks. And it is a little bit unnerving. Look, at some aspect, we know that when it comes to this AI infrastructure spend, it's supposed to be disinflationary in aspects, but not like we're seeing right now. A drop-off like this would suggest that there's something maybe a little bit untoward going on in the US economy. But of course, we have to wait for the official data to go and show that it's the case. And I'm not sure we're going to go and get that, because we're talking about data again, which is several weeks old at the minimum when it comes to the official level. Yeah,
interesting. And I wonder too, what bearing that would have on the Fed when you consider, the changes that are happening at the Fed, when you consider, the anecdotal evidence in the United States as well, although the US president desperately wants to get inflation down, and he seems to be using the oil market as a way to do that. It's really fascinating.
Absolutely. I think in a perfect world, would see the Fed really looking to go and probably hold off and not do anything until mid-year, presuming that Kevin Walsh gets the nomination and is able to go and take that role as chair, and then provide something of a clean slate to go and start implementing the policy measures that he's looking to go and introduce across the broader FOMC. But if we get data that's very, very weak, and so we're talking about not only the inflation side, but that payrolls report coming out midweek, we know that the Fed is basically stepped back a little bit and said, okay, we're not so much concerned about the downside risk materializing, but anyone can see over time that if there's even an inkling of weakness coming through in the labor market, the Fed is very quick to go and take action and ask questions later. So that's another one to go and pay attention to, because again, most of the data on the labor market has been okay recently. Any signs of weakness, the Fed will be back in play and fast into what markets have priced right now, which is around about the middle of the year.
Mm-hmm. Yeah, right. And Walsh is, for the record, one of those who believes that AI will be a disinflationary force overall. Scotty, thank you. Great summary. Anything to say just to leave us with the levels that we're at technically in the Aussie equity market, or how do you think it's indicating how we might sort of go from here on in?
Yes, from a pure technical perspective, we had a false breakout. I still look at what's going on in SPY futures, and SPY futures drives the underlying market. We saw a false breakout. We went and saw a bit of a raid beneath the 50 and 200-day moving averages coming to the close on Friday for our time. And then, of course, we saw that big bounce back and basically back at square one for where we are at the market. We're still now back in that very, very gradual uptrend, but it looks like a hard slog ahead. So where that corporate earnings is going to come through, the growth in particular, that's still a big concern out there for fundamental investors.
All right, well, some of that will get resolved this week. David Scutt from StoneX. Scotty, have a good one. Thank you.
You too. Take care.
Okay, so I mentioned the call already. Let's take a look at what my guests had to say about the stock of the day, which was Car Group.
Right now, the price is, I wouldn't say a huge bargain, but it's at the lower end, so it's pretty reasonable at the current price to get in if that's a business that you'd want to carry on into the future.
So that's a buy?
Yeah, at this price, that's something I'd be willing to buy.
Okay.
It's amazing how an economic cycle and a few policy changes suddenly and competition turning up changes the dynamics dramatically. I think all three are phenomenally good businesses, but the cycle is against them. It's hit real estate and Seek earlier than car sales. I think it's held up better, and that kind of makes sense. But the cycle is a cycle. I've seen this in so many different sectors where the weaker ones, because of the cycle, he gets hit first, and then eventually the cycle drags the rest of the sector, right? Look, I think it's a great business, but I don't think you need to be there. I mean, the multiples are high. There is going to be competition.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
Let's get across some of the market leaders today. Webb, I mentioned, big recovery there happening. And we've got Resolute Mining, Ora Banda, and Regis. I think Macquarie had a note out on these gold miners and lifting its price target, I know for sure, for Resolute Mining and Ora Banda. Drone Shield is up by 9%, still with that defense thematic. Some of the laggards, though, Challenger making that bid for Pepper Money, Seek. Some of these beaten down tech names getting beaten down even more. Nathan, who you just heard from there, calling them the old school tech names. So Seek, REA, and Car Group, the OG crew, I guess you could say, on the Aussie market. Brambles is off by close to 1%, but it had a good day on Friday. Let's take a look at in the smaller end of the place. We've got Austral Gold up by 25%. Sun Silver had a great chat with David Bird earlier today. You can find it online talking about silver, the silver shakeout, and what's in store for silver miners. Really worthwhile taking a listen and seeking that out on ausbiz.com.au. Let's flip it and see what really did weigh on the small to mid cap space. Worker off by 6.7%, and Frontier Digital off by 5.5% to 26 cents per share. So tonight we get the FOMC's Waller speaking. He is at an event talking about digital assets, but obviously we'll be parsing any of his comments and listen to the Q&A to see what he has to say about the path for rates and inflation, of course. Tomorrow, here locally, we get the Westpac Consumer Sentiment read and the monthly Business Confidence read from NAB. We see computer share results coming through. That was also on today's episode of The Call. Region Group, and we'll be speaking with the CFO, and Emotive in the small end of the space. All right, let's check in on this local market, see where we finished. Higher to the tune of about 2%, so 1.92% in the case of the S&P ASX 200 at 8,876. All of the sectors ending in positive territory, leading the charge higher, the A-REITs, Infotech, and the materials sector as well. It has been a pleasure to be with you today. Please do catch up on anything you may have missed online at ausbiz.com.au. If you're listening to this podcast, we'd love it if you could give us a positive review. It does help. It helps widen our audience. It helps bring this podcast and program to other Aussies to help them on their investing journey. I hope you have a good night. We'll see you tomorrow.